Okay, guys, let's start the webinar. So this Saturday, this week, not really a lot happening. We have the US government shutdown, so not really is going on. There's a lot of Facebook posts I'm seeing that US shutdown mean US market collapse, which is a little bit retarded lah. I feel like it's not like US shutdown then the whole US economy stopped working. US is mainly run by corporates lah. Okay, so even if the government shut down, the corporate are still running lah. Okay, but nonetheless, right? We do have somewhat of a muted week after a few days of consecutive rallies lah. Okay, in fact, this whole week was a 4-day rally, but on Friday it kind of take like a little bit of breather lah, where the stock market kind of rally a bit, and then after that kind of came back down. Yields are somewhat going back up again. The NFP data is delayed due to um the US shutdown, but we do have the ISM numbers coming out, and ISM services wasn't that great. I believe there was a bit of a decline in the ISM service number. Wait, let me open the tab up. But the manufacturing did surprisingly well for some reason. Okay, here. Okay, so for the manufacturing, the ISM was 49.1, which was quite a little bit of growth from 48.7, but nonetheless, the production level is increasing, the employment level is increasing, supplier deliveries are increasing. Okay, and the backlog of orders is also increasing. Of course, you will definitely see new export order going down simply due to all the tariff that is in effect. Okay, but majority of the comments are still very much centered around tariff and not very positive lah. Okay, but nonetheless, right, even within the manufacturing sectors, there are definitely a lot of bullish stocks, bullish counter within it, even though the overall comment doesn't seems to be that positive lah. And let's go to service PMI. Service PMI currently sitting at just past 50%. Okay, just passed, and it was a decline from 52 lah. Okay, but what is kind of a little bit worrying is that the business activity is down 5 points and the new orders are down 5 points or so. So there is some like sort of contraction coming in from the service sector lah. Okay, and the service sector have not been below 50 for quite some time already. So when it goes into 50, right, then maybe it will start hitting some sort of a contraction. Okay, so if you look at the overall service sector chart, you can see it is hovering around there, but most of the time it has managed to consistently stay above 50 lah. So this is something that we do want to watch out for. And gold continue to rally, and Bitcoin also we are at $122,000, which is like the previous high lah. Okay, it is sitting at the resistance level there, and that is coming from, of course, at the backdrop of US dollar somewhat weakening this week. Also, TLT also went down a bit due to all this shutdown that is happening. Okay, so not really a lot going on from macroeconomic perspective. The market itself is somewhat still generally bullish. So I will say that going forward, we do want to watch the service sector a bit to sort of have a good gauge of what will be the future condition like from the point of macroeconomic perspective. Okay, so even though the S&P 500 kind of like close red, right, the Russell 2000 is very green. It kind of like gap up, but it kind of close somewhere close to the day low lah. So let's go to the portfolio. I exited a few positions this week. Currently, my net profit loss is back above $10,000, sitting at 34.45%. So you can see it is somewhat like creating a lower high lah. Okay, sorry, a higher low. Then hopefully I'm gonna bounce back up lah. Okay, so you can see like a very nice uptrend here. So this week, I exited Alcoa after buying this and holding this since like April, which was very long now. Okay, it has been about close to 6-7 months like that. I exited on 1st of October lah. Okay, so if I hold it from April, right, it's somewhere around 6 months like that. Okay, so there was a total of $12,480 in profit, along with a small amount from the covered call at $880. So the stock actually rebounded immediately the next day after I exited. And the amount of profit that I gave up is actually not a lot. I exited somewhere here, somewhere around 33 like that, and then immediately it rebounded next day, right? Of course, if I'm still holding on to it, right, it is like additional $1 plus lah. I exited at somewhere around 33 like that. So let's say 33 on the dot lah, okay? That will be somewhere around $1.50. So I am holding 4,000 shares. So $1.50 would mean somewhere around $6,000. So it is like not a tremendous amount. I'm not really that salty over it also because like it is eating up a lot of my capital and it has been sitting there without really sort of contributing to a very big profit. Okay, so you cannot just look at profit from numbers alone, but also the amount of capital that it is tying up and also the duration that you are holding. And I have been holding this from April until now, and that would mean that over the course of 6 months, I have only gotten $12,000 from this trade profit compared to say other trades like Axometry where I'm only holding for 42 days and I'm getting like $20,000, right? That's a very big difference. Okay. So I'm holding it half the amount of time, but the profit is actually kind of double. But I'm more than happy to simply just let it go also lah. So it's also quite important not to like sort of fall in love with a stock just like if it's time to let go then let go lah. Okay, but overall if I just isolate all the profit from Alcoa, these are all the profit that I've gotten from Alcoa lah. Okay, so in total it's about 7,900 including all the initial losses that I've taken previously lah. So not that great, not that great. Considering the duration that I've been holding on to this, so it's fine. It's fine. I mean, we will focus on everything else lah. Okay. Try not to live in the past. Aside from that, I kind of exited Duolingo and then immediately entered back the next day because Duolingo was dropping 7% like that. And I don't really want to sort of expose myself to a sudden big drop lah. But immediately the next day, the next 2 days, it kind of recovered back. So I exited on this candle and then immediately re-enter the next candle. So in a way, right, I didn't really lose a lot. I lost $2,000, $2,100 like that, but the credit I've gotten from the short leg was about 700. So my overall loss is about 1,400. And the current position, right? The current position that I have on Duolingo is already at positive 900. Okay. So I'm not, I still, I can say that I still retain my position, but at a cost of maybe $500-600, which is not really a lot compared to my overall portfolio sizing. Okay. And aside from that, I have entered additional Intel position. I think I managed, yeah, it's here. Sorry, I haven't updated here, but I've updated in my an open position. Okay, and I have also entered additional camel position at strike 20 expiring in January next year lah. Okay, so these are the two new positions that I have recently entered for this week. So going through all the positions, Duolingo, nothing much to talk about lah. Okay, my target still remain, everything still remain. So we just ride it out to see where it can take us. Overall, this sector, the entire SaaS software sector, right, is actually not going to be that great in years to come, mainly because AI is taking over and for the kind of simple service that Duolingo is providing, right, definitely AI can replace it very soon now, okay? But we are just trying to ride the current trend to maybe 400 or 450 to sort of get us that last stretch of profit that we can get out of this kind of stocks, okay? And Salesforce and Dropbox also fall into the same sector also, and you can see why I'm not really that sort of afraid when taking the Duolingo trade, because if the entire sector were to head in the south direction because of the whole AI revolution, right? Then Salesforce and Dropbox are going to decline as well. And in fact, you can see Dropbox actually declining quite a bit already, okay? And I was able to get a position right at the top there. If you check the Dropbox thread, right, I have mentioned the point that I am entering more position, okay? So I am still very, very, very bearish on Dropbox, and I can foresee it dropping a lot further also lah. So that covers Duolingo. Cintas also, we just enter only, nothing much to talk about. It's a very defensive company doing a little bit of a sideways action. Is still pretty much a very valid trade lah. Okay, so we are looking at this back to recovery at somewhere around 226, 230. And let's say if the market goes into some kind of a correction zone or continue to retrace, right? I believe Cintas can still overall go up, mainly because of the kind of sector it is in. So it is a long position, but it is more of like a defensive long position. We don't really take a lot of defensive long position, but Cintas provided some kind of opportunity for entry here. And if I see this kind of technical setup on a company with very strong fundamental, right? I mean, you can't ignore lah. Okay, you definitely want to take the trade lah. In fact, if you are playing option, right, even if it goes up very slowly to 230, right, the profit to risk ratio, the risk reward ratio is very, very high also. But if you are on stock position, right, then the risk reward ratio is actually quite horrible. You wouldn't really want to be taking this on a stock position, okay? Mainly because from here until 230 is only 13.44%. It's not really a lot from a pure capital return perspective. And Cintas is not a cheap stock also. It is sitting at $202. Meaning to say if you have $10,000, right, there isn't really a lot of shares that you can buy with it. And at the same time, because the volatility is so low, you're not going to get huge ROI out of it if you are simply playing stock position. Okay, so normally for this kind of trade, definitely option is a lot preferred, because from here to here, you're only going to get 13.44% from your stock position. But if I'm playing how do I call it, option position, especially calendar ratio, the profit level can be like 40%, 50%, 60%, and the risk reward ratio can be about 500, 600%, that kind of, which is miles apart from stock positions. Next, IWM. IWM is a bearish hedge lah. Okay, we need some level of bearish hedge, so it's fine. It's just sitting there. Then the next one, Lululemon, which is basically more of like a long-term play all the way to 2006. May 15 lah. Okay, I don't really care what it is doing right now. The risk on this is very small also, but if it can go to strike 300 by expiration, then the risk reward ratio is somewhere around 1,600% lah. Okay, meaning to say if you put in $2,000, that $2,000 can become $32,000 if it is able to hit strike 300, which is somewhere around here, okay? So it is a very big climb. It is a very big climb. But of course, I am betting on a lot of how do you call it? A lot of catalysts that may be able to take effect from now until next year May, okay, which is a very long time. We can have interest rate going down. We can have new updates on tariff situation, or we can have any kind of improvement that the company is making. Okay, it is a much cheaper way to do bottom picking rather than simply just buying the stocks which can expose yourself to a very high risk. But in this case, for the butterfly structure, our risk is actually fixed and our reward can be very, very high if it goes exactly in our direction. Next camel company. So I have a total of like 4 position here. One is a cash secure put. One is a covered call, which is a covered call on this cash secure put. And the other one are just simple call. Okay, one simple call is all the way in next year April at strike 30, which is about 100% gain from now. And the other one is much nearer strike price at strike 20, and that is expiring next year January. Okay, so camel company here on Friday, it kind of went down by 1.29% like that. But overall, I do think that my overall portfolio, the weightage on camel company is quite big. Okay, it's similar to how I have gotten axometry in the past, but I do have quite strong conviction on this, and we see where it can go lah. Okay, the earnings is somewhere around end of October, so make sure you take note of the earnings date. But of course, if you are trying to borrow my conviction, when I say borrow my conviction, right, your conviction is my conviction. I don't want people asking me, hey Zor, you still in Camel or not? You still in CC or not? Don't ask me that, okay? If you follow, then you follow with whatever justification you have for following this trade, okay? So when I'm exiting or what, right, I will update. But if I'm not updating, then I'm not doing anything. And I personally have the ability to sort of stomach a little bit of retracement here and there. And if Camel Company is going to retrace, there's definitely some short position that are going to head down as well, and I can sort of balance out my risk. But if all you have is entire long portfolio with very concentrated risk on Camel Company, right? Then you probably will not have the kind of holding power that I have lah. So it's very different, okay? Especially all the copy traders, please be careful of what you are doing. I have mentioned many times not to copy trade, and if you are copy trading despite that warning, right, without really understanding the company itself or do a little bit of digging yourself, then there's nothing much I can do on my end lah. Next is Intel. So I have also entered Intel another small position at strike 38. Call option expiring in 2026 January lah. Okay, so Intel, I have covered Intel quite extensively in yesterday webinar also. So I will be uploading. Currently I'm uploading all Fridays webinar lah. Okay, so if you want to know more about it, you can go view the. If you can go actually view the webinar. So once again, right, if you are subscribed to Patreon but you're not viewing any webinar, you're not coming for any kind of live webinar, and then you are missing out a lot of stuff, right? That is basically on you lah, because like all the information is there, and it is up to you to make sure you have the time to sort of come for all this additional stuff lah. Because if you are just coming here to copy trade, then your there's only so far you can go from copy trading lah. Okay, you can only profit from stocks like axometry where it go one straight line up. If the stock is not hitting one straight line up, then highly likely that you are going to encounter with losses. But anyway, the idea is that I still want to remain some sort of a bullish exposure on Intel, because what I have here is basically how do I call it, entry position on Intel stock at 31, but currently I added a bit more position on the stock also lah. Okay, so you can see the cover call and the stock position doesn't match. I have 1,000 more shares in the stock than the cover call, and because I added additional 1,000 shares, right, my average buying price is now at 32.12. Before I add the 1,000 shares, it was somewhere around at 31. It is exactly 31, okay? So between the stock position and the cover call, right, there is not really any delta gain to be made. Intel is actually rallying all the way until 36 ready, but you can see majority of the capital gain from the stock position get eaten up by the cover call. Okay, so what I'm actually earning from these two positions is basically the credit that I got for selling Intel CSP earlier, and then the credit that I will get for selling Intel Strike 31 cover call. So I'm hoping that there will be some kind of early assignment on this. The moment I get the early assignment, right, I can get rid of the stock position and I can have a fresh batch of Intel position lah. So all in all, right, this new Intel position here is that I just want positive delta on my overall position lah. Okay, and the risk is not really a lot. Also, if I were to put this into zero, I'm only risking about additional $3,000. Okay, and I have actually gained more than like $3,000 from the two credit position that I will get from the cover call position. So it is just building off the profit that I have made from earlier position lah. And of course, if for some reason Intel skyrocket in the future because they are able to get the manufacturing on the foundry business aligned, and they get a few more contract from major customers like AMD lah, Nvidia lah, then definitely Intel have a very good chance to like move up in share price significantly. So the idea here is that the risk is more on the upside rather than the downside. Okay, and if Intel go down, then by all means, yes, I can I can tolerate until $31. If it falls below $31, then my Intel position will start to lose money lah. Then my loss will start eating into the credit. But as long as Intel can remain above $31, right, I think I'm perfectly safe from risk perspective lah. Okay, so the most this call option gonna lose, as I mentioned earlier, is about 3,000. So I'm not really holding a lot of risk in this position. And that's why I say the risk is on the upside, because I have more to gain on the stock going up than to lose on the stock going down. Next is CRM. So CRM is basically a short position against all the software company lah. As I've mentioned, right, all these software company are probably gonna lose a lot of their revenue to all these new AI model that come out lah. So as I mentioned yesterday, right, there will probably be a new wave of software company in the future that is gonna replicate or make use of all these AI in a very new business model. And businesses like CRM, Dropbox, or even Duolingo, right? They are going to get obsoleted with all these new AI technology that's coming up. Next, AAP. I think AAP not much hope really lah. Okay, I'm gonna take it as a loss. If I put this to zero, it will be somewhere around $6,000. So I think this trade is probably gone now. Okay, so now the short position that is currently making money right now is Dropbox. So Dropbox, I have entered additional $1,000 shares, so now I'm currently sitting at $3,000. And my entry price is somewhere around $31. Okay, so it's very close to like the high there. It's quite close to somewhere around here. Okay, so I entered like on this candle itself, and currently it's heading down. And you can see that on Friday itself, the share price movement was not really that great also. Okay, originally it was recovering, but after that it went all the way down to like negative 1.43% like that. So we will continue to hold on to this, and then this Dropbox strike 26 put option that I have, it is expiring in October, and I don't think this one can make it in time. Okay, currently it's at $26. Sorry, currently it's at $29, and to make it to $26, it is still about 11% down. And Dropbox is not that volatile also, so you can see how long it took from 26 to 30, like about 1 whole month or maybe 2 whole months like that. So I don't think it can go down that fast lah. Okay, but I mean, if it crash all the way down before expiration, I am more than happy lah. But currently, I'm treating this option as a dead option already lah, which is why I'm putting it zero there. Okay, I think I will just put AAP as zero also. Okay, Axometry. Axometry, I entered another 1,000 shares yesterday for Axometry. You can see here, from the top, right, it kind of retraced quite a bit from like 56, $57 now back at $51, and we have one green candle coming in. Okay, so I have mentioned before, going forward, right, you're probably this stock kind of like sideways. It's not gonna shoot up very aggressively, but will sideways a bit. And maybe until the next earning, you will see it kind of like going a little bit sideways. Okay, so any kind of retracement, if it is if you have the means, it is good to pick up a bit here and there also. So I do have a cover call of 1,000 share on the first 1,000 share position that I have at strike 55. So you can see it is a little bit in profit right now because the stock actually fell from strike 55. Okay, which is good because yes, yeah, the stock is actually falling, but I'm getting some credit out of it. Okay. And eventually when the stock goes up again, right? I hope that this cover call will not be there anymore, because it will not eat into the profit already. So I'm hoping that within the next 2 weeks, right, Axometry can stay below 55, okay, until Friday 17, which is 2 weeks from now. 10 trading days. It's not really that long. And lastly, we have the VIX position there. So you can see my current position is down about $14,000 with negative 3.55%. It's not really a lot. And you can see there are a lot of stocks here that is prime for very strong profit if they start to go in our direction. Okay, for example, Intel is prime for very big profit. I will start adding more and more position. Same thing for Camel company. The moment Camel spike up, right, I think my portfolio can suddenly gain like $30,000-$40,000 very, very easily. Very similar to how I can get for Xometry lah. Okay. Same thing with Duolingo and Cintas also, but Cintas maybe slightly slower lah. But I think Duolingo also have the opportunity if it kind of like do a short rebound during this period lah. Okay, like a broad market rally, like a Santa rally, whatever lah. Okay, and of course you can see Dropbox is kind of like underperforming the entire market also. If Dropbox continue down towards 28, 27, or even $26, right? There's a lot of profit to be made here. Also, I have about 3,000 shares currently sitting at $5,000 profit. If it dropped from 29 to 26, right, which is like another $3 more, that will be additional $9,000 profit, which will mean I will probably get about $13,000-$14,000 out of this. In fact, maybe along the way, if I feel that I can add more position, I'll definitely add more position, and hopefully we can like extract more profit out of this one. Okay, so it's good to identify which are the stocks in your portfolio that is able to get you money and which are the so-called dead stocks that you have to get rid of. And in this case, my dead stocks are AAP. The other dead stocks that I have is this Dropbox position that I have here. Okay. And Intel currently right now, very small exposure, but I'm looking to add more exposure once this cover call is being exercised by my counterparty lah, but currently they are not exercising yet. So we shall see how lah. Okay, we shall see how. We are very near the expiration already. So hopefully the early assignment will come in at some time. So Lululemon is for next year lah. Okay, so I'm not really gonna consider this. I'm just gonna put this under my pillow and be a little bit more patient with it. So now on to what else we can look for. Firstly, yesterday I mentioned Tarsus Pharmaceutical. Hopefully you guys are able to get it. I basically got it like a very small position on my CFD platform, and due to the big rally, right, that small position is like currently in about $2,000 profit. It's not really a lot. I mean, for a 10% rally, I would expect a very big profit lah, but currently I'm sitting around $2,000 USD on my CFD account lah. And aside from that, there are other positions that I'm looking at, but I want to share one very special counter, one very unique counter that I have actually managed to sort of dig out, and that is QXO. So now QXO, very important. If you look at the stock itself, is kind of like very weird. So don't really care about the past price, mainly because this stock is how do I call it? It has been reverse IPO lah, okay? It has been reverse IPO sometime in 2024, sometime around here lah, okay? So anything before 2024 is like not of any interest. So we just want to look at after 2024 when the stock was reverse IPO. So what is this reverse IPO and what is this stock actually doing? So this stock is under the wholesale trade, and it is actually a distributor for home building materials. Okay, so they are involved in home building materials lah. But what is interesting is that this stock is actually led by this person called Brad Jacobs. You can see here I check GPT his profile lah, okay? But it is more to show you rather than for myself. So who is Brad Jacobs? He is one of the how do I call it? Expert, the leading expert in merger and acquisition. And he have within his career, right, he have completed over 500 merger and acquisition deal. And he actually led 8 companies to IPO. Okay, he led 8 company to be IPO listed on the stock. And not only that, his expertise is in 500 merger and acquisition deal lah. So basically what he did was he in 2024, he launched QXO, which is the stock that we are looking at. So what he did is that he did it through reverse IPO, where he set up about $15 billion in the reverse IPO funds. And out of that $15 billion, right, $1 billion is actually his own money. He put $1 billion of his own money to sort of lead this reverse IPO lah. And currently now It is this company, previously it was called something else, but now it is known as QXO. So why does his expertise in 500 M&A deal is very important? Because what he is trying to do with this company is that he's trying to consolidate all the building materials company, because he feels, and I also think it's true, in that all this building material company right now in the market, right, they are very fragmented, extremely fragmented, and he's trying to consolidate them, like combine them into like one big mega company, okay? And he's trying to sort of digitalize the entire platform so that in the future, whenever a construction company want to buy all these building materials, right, it will be a lot easier. The process will be a lot more seamless. So basically, what he is trying to do is the same thing that Axometry is trying to do in the industrial space. He is trying to do this for the building sector, the home material sectors, okay? And the merger and acquisition expertise is important because in his this within his venture, right, this QXO venture, the strategies that he's using is he's gonna buy out a number of building materials company, consolidate them, and put them onto QSO platform. And once they grow big enough, right, they will keep doing a lot of merger and acquisition on all these very small, tiny, small scale building materials company, and combine them into like one big giant lah. And in fact, his strategy is so threatening that he was trying to buy out this, I forgot what's the company name, and then Home Depot just suddenly tuck in and like bid higher than what he wanted to bid for, and then Home Depot basically snatch away that companies that he want to buy out lah. So I'm not really, so if such a small company, QXO is a $15 billion market cap company, and if something as big as Home Depot is being threatened by it, right, then it probably means that he is heading in the right direction. Okay, Home Depot is 393 billion market cap company. So overall, this stock has quite how do I call it? A room for very strong growth in the future. So you can see here in terms of earnings, we don't talk about pre 2024 lah. Okay, pre 2024, there's nothing. It doesn't matter. But from 2024 onwards, you can see within this year the EPS is going to be profitable, and by next year, right, is going to grow by about 50% and then another 50%. Okay, so the growth is very strong, and also the revenue growth is also is going to be quite strong lah. But of course, all this M&A play, right, it's not gonna come into effect overnight also. So the more company he take over, the more this strategy is going to gain traction, okay? But of course, stock market is also forward looking. It's not gonna wait for QXO to take over every single company out there and then the stock will go up. You can see very recently it's gaining a little bit of traction, already from $13 going all the way until $20. And that is because recently, right, in the most recent quarter two of their report, they have taken over one company already, which specialize in roofing materials lah, okay, and they have onboarded that company onto the QXO platform already, into the digitalized platform already. So going forward, the more company they add to their portfolio, the more traction they can gain lah, okay. So yes, you are right to say that it is a DCA play. It is more like a long-term play, but that will also does not discount this from short-term play. Also, definitely, with every acquisition that he takes, right, the stock price is going to respond. Okay, the stock price definitely going to respond. The market is not going to wait for him to like acquire 10, 20 company, then it will go up. Every single company that he acquire, the stock price will definitely respond. Okay, and we can see that from here, the first response coming from his first acquisition, and hopefully in the near future more and more to come, okay. But definitely the time frame is a little bit more longer. So it doesn't mean that you cannot have any short-term play in it, because if you are looking at a very strong uptrend company that start from zero all the way until like very, very successful, right? There's a lot of a short-term opportunity to play lah. For example, if you look at Palantir, right, from all the way at the bottom until all the way at the top, yes, you can of course DCA and be hold long term, but somewhere along the way there are always room for very, very big gain. There are always room for extremely big gain that you can have outsized return by playing proper option position. That there's no need to blindly hold all the way lah. But if you do not know timing, if you do not know option structure, then of course you don't need you then you can definitely play also lah. Option structure will need no once again no as I mentioned, you can go for short term play. You can definitely go for 3 months, 4 months, centered somewhere around the earnings. So if every earnings is gonna announce one acquisition, right? Every earnings is gonna spike up in price lah. Okay, you can see all these rally in Palantir, right? It's always centered around earnings day. It's always centers around earning day. So whenever you see an earning coming, then you can play like maybe 2-3 month expiry to cover that earning. If you get profit, take that profit, wait a few more months, and then wait 1 or 2 more months, wait for the next earning, play for that earning. You can do that kind of short expiration play lah. But that's totally up to you. If you want to hold long term, then so be it. But of course, you do your own due diligence lah. Okay, we hardly hold anything long term. We are more of a short term play, so we definitely will be playing for the upcoming earning, which is in sometime around November. And after the November, the next earning probably sometime around February lah. Okay, so we will probably be playing one option structure here, and once this pays off, we'll probably play another February structure, and we see how much we can take lah. And the advantage of doing this is that you can roll your profit from one position to another. So let's say it is a little bit far-fetched lah, okay, but I'm just trying to sort of illustrate. So let's say you play 10K in call option, and then that 10K become 20K, and then the next call option you play 20K, that 20K can become 40K, and you can keep snowballing this lah. But if you are simply just dollar cost averaging, right, then your gain is not going to be as much as what this kind of short-term option play can give you lah. But of course, as short-term option play, right, definitely if you are faced with a temporary down move, then of course your option gonna expire, you're gonna lose the money lah. Whereas buy and hold, probably you will not be subjected to this. So there's pros and cons to both situations, but in what we do within Nimbus Capital, our strategy and mandate, we don't really buy and hold. Most of our trades are closed very, very fast. You can see here on my dashboard, the medium trade duration is 28 days. We don't hold anything like very, very long. And in fact, you can see only very few number of trade made it beyond 60 days. Most of the trades are concentrated within up to 60 days lah. Beyond that, we don't really hold a lot of trades lah. Okay. So if you want to do long term, that's up to you, but you go and plan out yourself on what you want to do with it. Okay, so this is QXO. Definitely, I want to enter, and recently there's a bit of retracement here that I'm looking to enter also. So, but make sure you have the patience lah. Okay, I'll probably set up a December expiration, or maybe even a January expiration with a calendar structure lah, where we can take credit on probably November credit, and then we go for the December play lah. Okay, we see how we can structure this. I just dig up this trade like not long ago only lah. So another trade that I'm looking at is also Alpha Metallurgical Resources. Previously, this was a short idea that we have all the way from here until here, but now it has fallen until don't know where really, but there seems to be some recovery coming in. And the revenue seems like improving. So you can see is very jialat, okay? The decline is very jialat, but recently the decline seems to be slowing down, okay? The decline seems to be slowing down and it's heading back out. So it is more like a recovery play, and we see whether if we can take advantage of this or not, okay? So anyway, that's all I have for today. So all the best next week, and we see whether or not we can enter QXO next week. There's still a lot of time, okay? If it's gonna retrace some more, then it retrace some more lah. Okay, guys, have a great night, have a great weekend.